Hello traders, this is Igor from FX Igor YouTube channel, and today I will talk about most important thing trading, how to find the good stop loss price level. So this is the most important thing in price action. I know a lot of trades now will tell, oh, I know that it's a simple. Everybody hope that there is some secret sauce and special strategy that can win the market, but stop loss is the most important thing. So here we are watching a daily chart for British pound dollar example. When you watch this chart, you can add on daily chart important price levels very easy. For example, I will put this resistance. It's obvious. So here I can put another. Here I can put another. Here I can put another. And you can see all these price levels are something that repeat in the past. So you see this level here. It was the resistance in 2023, resistance in the 2024 July. Of course, if you go further, you will see that all this level repeat itself in last 10 years. And this is something very interesting. Now we can continue and find important price levels like this. You can find a lot of levels and put all of them on the chart. What you can, for example, right now make some kind of conclusion is that on daily chart, by average, in last couple of years, we have around 200 pips between the important price levels that we can find on daily chart. And these levels are reaction level. If you go in last 10 years and maybe more, 20, 25 years, you will see that all these price levels are important reaction level. And every time when you reach this level, so I will just to see how that looks like. So for example, I touch this level, there is a reaction. We are going down. Now there is again reaction going up. There is a reaction here, falls, turning down with falls breakout, then we go up again. Reaction, we're going down. And every single time when you touch this level, there is a reaction. 1, 2, 3, 4 days, then we break. Then we try again to break, then we break further, etc., etc. So these important price levels, very important. But a lot of traders think this is good price levels to enter in trade. Of course, you can enter into trade and you can put your stop loss in some very, very important price level that you want to be. For example, if we do 1-to-1 risk-reward ratio, if we enter in this point, we can put the stop loss here and target here. It's obvious. But there is one catch. Sometimes traders put very tight stop loss, and you can see a false breakout. For example, look this. We have a local bearish trend several days. We break a little bit this support, but very, very fast we are up and we are going more up. So as you can see here, we have a lot of false breakout trade. So stop loss, if you have a price action, if you have a price action, for example, and you trade short term, we can put, for example, on 1 hour chart, on 30-minute charts. It's not important which time frame we watch. It's important that when you watch the chart, you should give asset time to breathe. You need to put your stop loss be wide enough, and if you do that, you'll feel comfortable. You'll not have any kind of problem. For example, one of the most common support resistance levels is around 1.285. So this price level here can be right here, and you can see sometimes how price touch this level, reacts, sometimes touch this level, going 15 pips down, then make reaction up. So 15, 20 pips, 30 pips, it's nothing in trading. And the problem that traders put 10, 15, 20 pips stop loss can create a huge drawdown and a lot of bad trades instead of profitable. So one of the most important thing when we're talking about price action, talking about any kind of chart, daily, weekly, monthly, 4-hour chart, 1-hour chart, whatever, is to try to put a stop loss, at least one daily average range, at least one daily average. Sometimes that is not enough, but it can be enough if you're a short-term trader. And in that case, you should put 1 or 2 daily average range to touch target. I know that for a lot of short-term trades, it's too much. They want to risk 10 pips, 15 pips, etc. But you will have a lot of false breakout. You have a lot of losing trades, and that can be very, very bad. Why? Because a lot of times you will reach the stop loss. You will make a losing trade instead to make a profit. And find the right stop loss. And sometimes maybe 10, 20, 30 pips more to put there, just as protection, is a good idea. Of course, you need to decrease the risk and you will feel much comfortable. Very often we have a choppy price. This is the example of choppy price. Look this. 1 day, 2 days, we fell almost 200 pips. And then in 2 days, we go 200 pips up. Then again, we fell. This is the roller coaster. This is the something that you have upside down. And this is crazy. In that case, if you want to play this, you really need to find your stop loss around important price levels and always put a little bit more. Like I said, a little bit more. You should put at least 1 daily average range or at least half daily average to range above or below this important price level. When I trade a short term, I'm trying to put my stop loss to be maybe half daily average range from this important price level. But sometimes I have a losing trade in that case, even if I catch the real buyer. So the trading can be really tough and a lot of losing trades you can create. To decrease the number of losing trades, always it's a smart use a wider stop loss, and this video is created for this. When people say price action, everybody thinks, oh, this is the short time trade, this is 1-2 hours trade, there is a price action. No, you can see the price action right now on daily chart. This is the price action too. Why? Look this, where we were in the beginning of the October, the end of September, October, level 1.38, 1.38. Can you imagine that? And if you go and look, for example, 1 month later, you are 1.2850. It's almost 600 pips. 600 pips for 1 month. Is this a price action? Is this a strong, very strong bearish bias in just 1 month? I think so. So it's not price action if you watch 15-minute chart, 5-minute chart, 1-minute chart. Price action is, you can see on every single chart time frame and understand that you can follow that push, but you need to find the right stop loss. Sometimes, I will be honest, look this. Sometimes I add positions, for example, like this, here or here, because I want to have a good risk-reward ratio. But I will put my stop loss above the highest high, and I will feel comfortable, of course, with the lower risk. Sometimes it's very hard to trade. Sometimes you will enter exactly here, put the 10-15 pips above, price will reach that 15 pips and go down. And what will happen? You will have a losing trades instead of winning. This is not good. And in my personal experience, I will try to push myself more swing trade and more wider stop loss in 2025. So tell me, what is your opinion in 2025? What's your decision? Will you continue with short-term trades or you will go to the swing position trades? What is your idea and plan for the next year? I wish you a great day and bye-bye.